Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN Sunday for Sunday, January 30th, 2022. We've got another great show for you this week with members of the media, academia, and financial services standing by to provide their analysis of all the news for the week. So sit back, relax, enjoy this episode of BRN Sunday. Let's kick things off with a look at what's going on at Capitol Hill when it comes to retirement benefits and so much more. Joining me on the line, you know them as the Legal Eagles, but we also know them as David Levine, Kevin Walsh. Both are principals with Groom Law Group, and that's an employee benefits law firm based in Washington, D.C. Gentlemen, great to talk to you. Thanks so much for joining us on the program this morning.
It's always good to be on, and I feel like we should be almost to 2023, and yet it's only the end of January 2022.
Absolutely.
And yet I think David's going to talk about how exciting a year it's already been.
It has been an exciting year, David, and we're going to get to the Supreme Court because there's some benefits tie-ins there. But let's talk about this Northwestern case. Supreme Court weighed in, I think, recently, and I know you and Kevin have given it a lot, and the folks at Groom, I should say, have given it a lot of thought.
Yeah, well, thank you, Jeff. And, I was going to say, we're going to do our 2022 in retrospective right now, because clearly it's been such a long 2022 already. We can just do the retrospective a month in. So I agree with Kevin. All right, so let's cut to the quick here. What are we talking about? We are talking the Northwestern Hughes case. It went to the Supreme Court. Kevin and I talked about it in December after oral arguments, and we had all these discussions about what did the justices feel, how did they say, and the caveat we left with was oral argument's interesting, but let's see what we get. And this week we got, and what did we get? We got a ruling that basically, in my mind, I'll simplify it to two things. I know Kevin and I can go a bunch of different ways on this. Number one, the Supreme Court said, look, you can bring claims about individual fund selection. You can't just say I have a big giant lineup and therefore everything in there is good enough. That's one. So plaintiffs can basically say, we're going to pick at this fund. But number two.
Bless you, Kevin. Sorry.
True. No,
I'm doing my best, guys. I'm doing my best.
You're great.
I think Kevin's giving color commentary with nonverbal commentary. But
David, I think you're making that first point a little bit more complicated. I think really it just comes down to they're saying that if you're a plan sponsor, you can't say, look at me, I've got a really big lineup, so it doesn't matter if a couple of my options are bad.
Right. Yeah, I agree. Number two, and to be realistic, there were lots of different schools of thought on that. Number two, the Supreme Court also pointed out that this is not a game about 20/20 hindsight, that there's a lot of factors involved. And interestingly, to our perspective, basically said, look, remember we had our Dudenhofer case? And you got to look at that case as some guidance. Weeding out the sheep from the meritorious goats was the phrase that everybody said was a great line from that case. In English, we have yet to see what the court will do. We have a couple district courts have already started citing it. But the real question is, what do you really need to plead? Because this case was really focused, yes, the Northwestern specific facts, but people were hoping the Supreme Court would say, look, a cookie cutter complaint isn't good enough to bring a lawsuit. And there's a real chance, given that Dudenhofer was viewed by some as a plaintiff's victory at first, and then over time it became clear that the fact that you actually had to be clear in pleading something and had not heightened pleading standards per se, but basically needed more specificity in what you pled, that may turn out to be a win for the defense here, because if the court starts saying, look, simply saying, oh, there were cheaper other funds out there, and that's not good enough to get by a motion to dismiss, that could really help stem the tide. But the reality is we have to wait and see. I know Kevin has more commentary on things like standing and everything, but I wanted to do very high level and let my friend Mr. Walsh dive deeper.
Go for it, Kev.
Well, thanks, David. Yeah, I think it's a really interesting decision, and what's worth pointing out is it's a 6-page decision that was unanimous. So at oral arguments, I know we speculated that it seemed like, one group in the court wanted to go one way while another group in the court could possibly go another way. It seems like they have kind of a compromise decision where, they sent it back to the Seventh Circuit essentially to, reanalyze using the Dudenhofer-Tibble framework. And what that means is essentially, that motion to dismiss, they want them to take a closer look. As David said, separate the sheep from the goats. And sheep are meritorious, whereas goats are not in Supreme Court speak. So where I think this is going is it could lead to the courts taking a closer look at the motion to dismiss stage, which in the ERISA context, where all you're slapping together as a plaintiff is saying, look, bad things happened, it has to have been imprudent. This could make it a little bit easier for defendants to try to at least argue that these cases should be resolved quicker. Another interesting thing was that David highlighted was the standing issue. If you're challenging a specific investment option in it and you're not saying the lineup as a whole is imprudent, then, and we'll have to see how courts play this out, but in theory, if you're an investor in the plan and you didn't invest in that investment option, then maybe you shouldn't be able to participate in the class. And what this could do is it could lead to, a tougher battle or a longer, more protracted battle to figure out who should be in a class and make class certification a little bit trickier. In ERISA cases, historically, it's been pretty easy once you've gotten by the motion to dismiss to get class certification because you say, look, everybody's participating in the same plan. Look, we all have the same investment options. Here it looks as though, investor decision is going to be a factor. And that could create some challenges where, folks are in and out at different times.
Yeah. Gentlemen, so my understanding is, so this was a unanimous decision or, I don't know, decision.
Yes.
They right?
Mm-hmm.
And so what does this get punted to the circuit court to weigh back in again?
It does.
Yeah, so
it does. And it was 8-0. Justice Barrett did not participate in it. So therefore, it goes back procedurally. The Seventh Circuit reevaluates it based under this guidance. It could come to the same outcome. It won't. We expect a heated battle there when it goes back to the circuit. Now, Kevin, I know our time is tight. Maybe we should talk about Justice Breyer for a second.
Yeah, let's talk about Stephen Breyer.
Yeah, so as most listeners know, Supreme Court 9 justices, really big deal when any one of them leaves the court, and there's an opportunity for the president to nominate a successor justice. This past week, Stephen Breyer, the longest-serving member of the court, a Clinton appointee, announced that he's going to step down at the end of the term. What this could mean is, in all likelihood, we'll have a new justice in the court's liberal wing. Right now, the liberal wing is outnumbered 6-3, so this likely won't change the voting pattern of the court because Justice Breyer himself was a member of the liberal wing. In terms of the benefits case, or in terms of our areas of law more generally, Justice Breyer has tended to be a little bit more participant friendly than some of the other justices in the court. But an area where benefits intersects with other financial services more broadly, privacy. Justice Breyer has been more right of center on privacy in terms of allowing for greater monitoring of individuals. So if we see a more liberal justice appointed, that's an area where we could see some, development more towards individual rights on the privacy front. Now, the big thing here is just waiting to see who President Biden nominates. And with the 50-50 Senate, the nomination process could be an uphill battle. There's been some speculation that you could see someone like Kamala Harris nominated. There's other individuals who've been discussed. It would be a challenge to nominate Vice President Harris because with the 50-50 Senate, that would leave her in a position where she'd have to be the tie-breaking vote on her own nomination. David, do you have any speculation you want to make, or where do you want to go from here?
I think, we're probably good enough for now. There's going to be a lot more time to talk about it. I think we'll have to see where it lands. And, Jeff, we just need fodder for a future week. So we'll put it on ice and come back when it comes up.
Yeah, I'm gonna say, just last question here. I mean, is this something that, you always hear about the major cases around the Supreme Court, but is this for your firm at Groom Law. Is this something that you all watch on a regular basis, or at least watch when there's a nominee that comes up? You look at their record and you try to figure out on behalf of your clients what where these decisions have been in the past for some of these jurists, these
Uh,
selected. Sorry, go
I
ahead.
think.
Yeah.
I think.
So
Go,
Go
go ahead.
ahead. Sorry.
I was just
yeah.
going to say.
So
I think
okay, David.
you and I are. We both do the same thing. I think every lawyer looks to see what does this mean for their clients when this comes up.
Mm-hmm.
For us, ERISA is an area where, a lot of the time the justices all get together or close to equal, but a new face in the room certainly has an impact. So of course we look and evaluate. Kevin, more to add?
Yeah, and I mean, it's not as though we look at their decisions and say they've made up their mind on different things. It's more just, how is it that they go about analyzing cases, and what do we think that means in terms of how they'd analyze, new questions as they come up.
Well, I'm hoping to see both of you on CNN, Fox News, and all the major outlets when they ask questions about how do these people weigh in on ERISA. David Levine, Kevin Walsh. I think that would be hilarious, by the way, and I urge my fellow media people to think about that. David Levine, Kevin Walsh, great talking with you. Enjoy the rest of your weekend and stay safe.
Thank you so much.
Yeah,
Bye, guys.
Bye.
Welcome back. Now we're going to turn our attention to healthcare. Joining us on the line, she is the healthcare editor for Business Insider. She's also the editor of Dispensed, a regular newsletter capturing all that's going on in the healthcare world sector part of the economy. Lydia Ramsey. Lydia, great to talk to you. Thanks so much for joining us on the program this morning.
Yeah, thanks for having me.
So obviously a lot going on with Omicron. There's been some, I think, developments in terms of vaccine, but when you and the team at BI are covering healthcare, what's top of mind this week for you?
Yeah, definitely keeping an eye on those Omicron infections. We're seeing a pretty steep decline. Case counts are still pretty high across the country, but it's nice and heartening to see the decline go pretty quickly. Other times when we've had spikes, like the Delta surge and other things, kind of plateaued at a high level of infection. So it's encouraging to see those numbers kind of start to change. But yeah, this has been a big week for developments in that arena. I think drug makers are trying to figure out what to do about Omicron. We saw this week the FDA kind of said we shouldn't be using monoclonal antibodies for people who are infected with Omicron. It just isn't effective, which is, tricky to see. We lost one of the tools in their toolbox, but good on the FDA for saying, nope, this is where the limitations lie. And then on the other side of that, we had Moderna and Pfizer both announced that they have started their trials testing out an Omicron-specific booster shot. So that could be something we see in our future.
Yeah, certainly good news. I was going to ask you this, Lydia. When I got tested for COVID, are there, like, if you're just a general layperson and you've got one of these COVID tests that you buy over the counter, can you tell which version of the virus that you have? I mean, are they that sophisticated, or is it it's still like, okay, you're positive, and we don't know if you have Delta, traditional COVID, or Omicron?
Yeah, something I think about a lot is seeing where the kind of breakdown is on a national level. The CDC tracks that data where they'll say, like, okay, Omicron is the prevailing variant at the moment. Because you're right, those antigen tests, the ones that come back with a line that says you're positive, those aren't going to tell you anything more than that. It's really just that binary yes or no.
Yeah. And in terms of these developments for new vaccines, I mean, just remind our audience, how long does it take, from the point where I think all of us are familiar with the original vaccine, and I think it took 8 to 10 months to develop or something to that effect. What are we talking about in terms of development, testing, and then eventually implementation? What's the time frame for that typically look like?
Yeah, so this has been something that drug makers have explored, I think, around Delta. Definitely, there was a lot of talk of it when the first couple of variants started coming out, of just being able to create a variant-specific booster shot. We haven't had one ever arrive yet, right? When we got third doses, it was the same kind of compound. So when we think about the bar that we're going to have to clear to get an Omicron-specific booster, they're going to need to do trials that last, a fair amount of time. The timeline gets a bit truncated, but this is something, obviously, we first heard about Omicron back in November, at the end of November, and drug makers started talking about creating those boosters quite soon after. So here we are at the end of January, and we still have, a few months to go until we get it. So it's a faster process than kind of the initial stage, but it's not necessarily the case with say a flu shot where you're able to just plug it in and get it out to people immediately. There's still that kind of bar. We have to see if these are actually effective in kind of Omicron transmission.
Lydia, I know you're not a travel reporter, but their travel is kind of tied to COVID. I mean, we hear them kind of synonymous. Any development in terms of maybe relaxing some of the COVID CDC restrictions on countries outside or traveling outside the U.S. or coming to the U.S. Any developments there? Because a lot of it is predicated on testing and wearing a mask and vaccinations, et cetera.
Yeah, I wouldn't see a ton of change. I would expect even for domestic travel that, frequent testing is advised. I wouldn't see that becoming mandated. And I'm not anticipating mask mandates coming off anytime soon. For international travel, I think we're going to be in this world of you're going to have to be testing negative in order to travel internationally or travel back to the U.S. from your international destination. I could expect that becomes the standard for a while until we get to kind of an endemic state for COVID. Yeah.
Is there a definition for endemic when this all ends? I mean, I think I was reading some poll. You know what they say about polls, right? I mean, it's only, I think, polls are like 1,000 people. We have 330 million people in this country. But in any event, I think people were in this poll with 1,000 people, they were expecting, this group said that, the majority said that they were expecting the pandemic or this thing to be with us for a long period of time. But have experts, people at the CDC, FDA, and not FDA, but immunologists and virologists determined what the end state looks like, or is it just kind of go away over time?
Yeah, I mean, I definitely don't think COVID is going anywhere anytime soon. I think the past 6 months have proved that to be the case. But I know there are definitions for when a disease like influenza or the common cold does become endemic. Mm-hmm. I don't know exactly what those specific qualifications are, but I think the way I'm thinking about it is there's going to be a point in which people have COVID in their environment. Maybe it'll feel a little bit closer to how we felt in the summer after vaccinations and Delta hadn't surged yet. I think it would feel a little bit closer to that, where some people are still getting COVID, but we're not seeing the massive surges that we're still seeing.
Yeah, it's going to be interesting. I mean, it is, and you take a step back, kind of interesting to watch the flow, for lack of a better term, or the transmission of the virus and how these variants are evolving, how they're transmitted, and then ultimately how they kind of go to the next thing. So I think it's going to be interesting to watch this. We'll, of course, be checking in with you in the future to find out what's happening with vaccines and solutions to this issue. Lydia Ramsey, always a pleasure chatting with you. Enjoy the rest of your weekend. Stay safe, and we'll talk to you again very soon.
Thanks so much.
Bye-bye. Have a good weekend, Lyd. Bye-bye.
Thanks.
Welcome back, and let's talk a little real estate now. Joining us on the line, he's real estate reporter for Market Watch. That's Dow Jones Market Watch. We're talking about Jacob Passy. Jacob, great to talk to you. Thanks so much for joining us again on the program this morning.
Glad to be here.
All right, so lay it on me. The Federal Reserve meets this past week. I think they've kind of signaled that there's going to be at least one rate increase, although who knows. But break it all down for us and how this relates to real estate and mortgages and gosh knows what else.
Totally. So, like you said, the Fed is almost certainly going to raise interest rates in March. And, for folks who are looking to buy a home, or you're a homeowner and maybe perhaps looking to refinance, to cash out some of that home equity you've built up over the past couple of years, thanks to soaring home prices, this is going to have a huge effect on you. And it probably already has in a way because of mortgage rates rising. So over the past roughly month or so, mortgage rates have risen 0.5%, which is pretty quick and a pretty stunning rise. They're now back up to the levels they were in March 2020, right at the start, or not the start, but the kind of beginning of the really bad phase of the pandemic when the lockdown started. So we're back to kind of square one in a sense there. And where they go from here is not set in stone, and there will likely be a lot of volatility. When I spoke with real estate experts this past week, the general consensus is that rates are going to continue to rise this year. Now, in the shorter term and, from a week-to-week basis, there will be fluctuations. And there will probably be weeks where rates drop a little bit or stay flat. Like this week, for instance, even though the Fed came out with this news, the latest report from Freddie Mac showed that mortgage rates essentially remained flat over the past week. So they didn't surge higher on the news that the Fed is almost certainly going to raise rates in March. And part of that is probably because mortgage rates are long-term interest rates. So when the Fed hikes rates, what they are adjusting are short-term interest rates, whereas, the mortgage rate is, a 30-year loan. So it's a longer-term interest rate. So those rates are typically based on movements in the bond market for long-term bonds, like the 10-year Treasury note is often an indicator. So those interest rates had already moved higher over the past couple of months, really, in anticipation that the Fed was going to do something to address inflation. So there is an extent to which the March hike that we are all now expecting will come from the Fed may have already been fully baked into the mortgage prices we see in the market right now. But the March hike is probably just the beginning of multiple. I mean, I think the Fed is hoping that they'll raise rates in March and that'll do it. And inflation will come down. But I think a lot of folks are expecting that won't be the case. And given that, if the Fed has to make multiple interest rate hikes this year or over the next couple of years, all of that's going to factor into mortgage rates, in terms of the expectations among investors and things like that. So it won't directly cause an increase in rates, but it'll indirectly cause one. And we'll probably see that play out throughout this year.
Jacob, let me ask you, and I know your segment's about real estate, but I want to ask you, you also are a personal finance author as well, or journalist as well. What about other loan types? For example, car payments, if I have credit card debt, savings. I mean, what does all this mean? It's kind of a jumbled question, but what does all this mean for those types of financial instruments?
Yeah, so for other types of loan products or savings products that have interest, either you pay interest or you earn interest. With a lot of those products, the interest is variable. So like a credit card is a good example. Like when you open a credit card, you're not opening a credit card with a set interest rate for the entire time that you have that credit card. The interest rates or the APR on that credit card will ebb and flow. It will rise higher and lower. And in that sense, the Fed movements do have a big impact. Typically, credit card interest rates will move higher or lower when the Fed raises or lowers interest rates. And that's in part because they're shorter term interest rates like I was describing before, and not like long-term ones like mortgage products. Another example of that would be like home equity lines of credit. Those typically carry variable interest rates rather than a fixed rate. So most people's mortgage will be a fixed rate, but with a home equity line of credit, it'll be a variable rate. And that's like those sorts of decision making, is important, especially for people who are thinking of possibly refinancing, because, there's obviously a lot of folks out there who, may want to refinance to pay down other debt, to, remodel their home, to, contribute some money towards their children's education, whatever it might be. And you'll have to think carefully about the way you go about doing that. Many people's default might be to refinance, to do a cash out refinance. But the problem with something like that is you're setting yourself, a new interest rate for the rest of the time you have that loan. So if you're refinancing into a 30-year mortgage, you're going to be paying, perhaps, upwards of like 3.5% interest on a 30-year mortgage where your current interest rate may be much lower, like below 3%. Whereas with a home equity line of credit, that's a variable rate, so it can certainly, the interest you pay might go higher over the time that you have that loan, but you won't be refinancing your overall mortgage and stuck with a higher rate for the duration of that. So, I mean, there's all these sorts of decisions, or maybe it might be better to just put money on a credit card and not cash out. There's all these decisions people have to make right now in terms of the debt they're taking out, but it is a good reminder to just pay attention to the interest rates you're paying. And, with things like credit card, the rule of thumb holds true that if you don't carry a balance, you don't have to worry about the interest rate on your credit card. So, sticking to a strict budget and making sure you keep your debt low will be useful in this era when rates are rising.
Yeah, I think we kind of have been lulled into a false sense of status quo. I don't want to say security, but you're kind of used to doing it one way, and now all of a sudden rates are rising. That has an impact on virtually every aspect of our financial lives, from the banks to the credit cards to the car payments. And by the way, with car payments, just like in houses, cars are hard to find. Prices are going up. So I think people need to really do, just my opinion, and I'll get yours. I think people really need to do a lot of due diligence and take a step back and think about what they're doing so that they manage their financial picture more clear going into this new paradigm.
I totally agree. And you mentioned before, like savings and things like that. And that's another area you need to do your due diligence, because for the past couple of years, and not to say that savings rates are suddenly surging, to super high levels, they still are pretty low for most, bank accounts and other savings vehicles, which has been a challenge for a lot of folks, because it's hard to save money and build your savings without putting it into the stock market or something like that. If you want it to remain as cash that's at your disposal, it's tough right now. But this is all the reason to just be paying attention to, the high yield savings accounts on offer, what interest rate they're now starting to offer as rates rise. Same with, certificates of deposit and things like that. Start examining those a little closely, because you might start to see some more beneficial products or offers coming out in the coming months as the Fed begins to raise rates. Because that will have a ripple effect throughout the rest of the financial system. Yeah,
absolutely. Got to keep that in focus. A really important part of your financial picture and due diligence. And look, Jacob, I remember historically we're still at very low interest rates. I grew up in the 70s and 80s. I can tell you about high interest rates. Jacob Passy, we're going to have to leave it there. Always great that you stop by virtually, of course. And thanks again. We look forward to having you back on the program again very soon.
Talk soon.
Bye-bye. Well, that wraps up this episode of BRN Sunday. Have a topic of interest? Someone you think we should talk to? Well, don't forget to drop us a line. And don't forget, for all the information and news in lifestyle, wellness, tech, finance, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives and see our latest content? Well, visit our website and our streaming partners like Amazon, Samsung, Roku, and over 100 more. We're back again tomorrow for BRN AM. We'll have a very special guest. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.